Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the most bullish scenario where we have a finished WXY corrective structure where wave W is a zigzag, X a 3-wave corrective move, and then wave Y is a flat. The common target for wave Y is between the 0.618 and the 1.236 trend-based fib extension taken from the high to the low of W to the high of wave X, giving you a target area between 63.7k and 55.6k. Inside wave Y, we then look for a flat, right, in a 3-wave A, 3-wave B, 5-wave C to the downside, where your extended target for wave C in a regular flat, as wave B retraced to the 1 to the 105, that's a regular flat target, is the 1.618 at 60.9k, taken from the high to the low of A to the high of wave B, and as you can see, is respected so far. If we then zoom in to this impulse to the downside, as we need to be able to count a 5-wave impulsive structure to the downside to end wave C here, then we go down to the 1-hour time frame and have a look at especially wave 2, wave 3, and wave 5. So if we look at this wave 2 here, we are counting a wave 1, 2, 3, 4, and then we have our wave of 5. Now in this particular scenario, this over here is your preferred ending for your wave 2 and then a WXY structure, and this is then your sharp wave 3 towards the downside. Reason being, if you put your wave 2 on the left pivot here, then this is your 1, 2, and we need a 3, 4, and a 5 in wave 3, but we never really got a wave 4 unless this is your very small wave 4, which is still smaller than a wave 2, which is not really preferred, as usually a wave 4 is longer than a wave 2, plus you would have a truncated wave 5, which is incredibly rare, never preferred, lowest probabilities unless all of the other stuff fails. So we have to put our wave 2 on the right pivot over here, but then you can see it didn't hit the 0.618 trend-based fib extension taken from the low to the high to the low for then a potential WXY, which is a flat corrective structure zigzag, and that is actually very rare for a wave Y to not at least hit the 0.618. If we then look at this wave 3, well, the minimum target for wave 3, or at least the minimum rule, is that a wave 3 is not the shortest wave out of a wave 1, wave 3, or a wave 5. And that is not the case because it passed the 1-to-1 taken from the high to the low of 1 to the high of wave 2, which is good to see, but a wave 3 usually does like to extend, as most commonly a wave 3 is the highest volume, longest, strongest wave in an impulsive structure, and an impulse also includes a wave C, but in this case it is relatively short, quite similar to wave 1, and this opens the door to have a bit of an extended wave 5, and an extended wave 5 does like to end on a high amount of volume, especially if we talk about wave C's in corrective structures like an ABC flat or we have an ABC zigzag. A wave C does like to end on high volume at times, and even if we go to the lower time frames, the 15-minute, you can see that the highest volume candle is actually over here, the low, but that is actually quite uncommon, where if we're looking for an impulse, even inside a wave 5 that is extended, you would still want to see a 5-wave structure, right? But we ended the move on the highest volume, which then would indicate, as we never really got a 4 and a 5 and another low, that this is your wave 5 of wave 5 ending on high volume, which is actually quite rare that happens, right? So that doesn't really give great probabilities for this to be the low on a high amount of volume. Of course, we continue to observe the local price action, because if we then want to see an impulsive move towards the upside in a wave 1, 2, and continuation, then preferably the low of your wave 2 is in. So if I open this scenario here where we have our wave 1, we are then looking for 2 and continuation to the upside in a wave 3 or potentially an ABC, but by all means upside, then this has to be the low of your wave 2 at least, because the common target for a wave 2 is the 0.5 to the 0.786 Fibonacci taken from the low to the high of your wave 1. We hit the 0.786, which is your maximum target for a wave 2, and the 886 is a very rare target for a wave 2. Of course, this move to the downside, however, looks quite impulsive to the downside. You can count a 5-wave move in here. However, in this wave 2, if we would be looking for a 5-3-5, like a zigzag structure, right, then wave C needs to end below wave A. But if we end below wave A, right, we're pretty much going to hit the 886 target area. And that is something you don't want to see in a wave 2. But if we count this impulsive structure to the downside as a wave C, we need to think of a flat. And then we have to change this wave 1, because putting the wave 1 here gives us at least some probabilities of some sort of a diagonal, right? But if we move this wave 1 to the left, just to make this a wave C and then a flat ABC and continuation to the upside, this wave 1 now becomes a 3-wave structure. But a 3-waver, well, that's possible in a bigger diagonal where wave 1 is a zigzag to the upside or a double zigzag, and then you have a correction and continuation in a 3. But in a zigzag, your wave 2 can only be a zigzag. A flat is not allowed in a diagonal wave 2. So therefore, we have to put that wave 1 pretty much on the top. I could put it over here, but then this wave 2 is incredibly long compared to wave 1, very low probabilities. That is correct. So I would then prefer putting that wave 1 on the top. But that would mean that this has to be either a double zigzag to finish wave 2 over here, or we still have another move down to go, but we are going to get very close to the 886, which of course is not that ideal. Now, pretty much summarized, I put it in the box over here, right? This looks impulsive. There's not much option for a zigzag left in a 3-wave structure over here, an ABC, right? And for a flat, if we look for an ABC, wave 1 becomes 3-wavy and a flat isn't allowed in wave 2 of a diagonal. So that's something we have to keep in mind. Doesn't give the greatest probabilities for strong continuation, as we of course continue to observe what happens here. The scenario where we're going to take the low of A is a bigger regular flat. So 3-wave A, 3-wave B, 5-wave C, where your wave C is not yet finished. So we have a high volume move here, right? You can see high volume in the low. And in this case, you want to see a wave 4, a range, then another drop on lower volume. That is preferred, right? Even though we know a wave C can end on high volume, preferably we have another move to the downside on lower volume in this scenario, reaching the common target area of a wave C, the 1 to the 1.236, taken from the high to the low of A to the high of B, and also taking the low of A, which on some charts already happened, but on this chart and some other charts did not yet happen. So it would be nice to align all of those charts, take the low over here, which is pretty much a must for a regular flat as well, and then hit the target area where the extension target for C is the 1.618 at 51.6k. In this case, we are then looking for an impulse where we still expect at least one more low. So here we count things a little bit differently. We have our wave 1, we have our wave 2. We count another 1, 2, 3, 4, 5 to the downside, where wave 3 now extended to the 2 trend-based sub-extension, taken from the high to the low of 1 to the high of 2, which is fine. For wave 3, it passed the 1.618, which is good to see. We then have our wave 4, where preferably the high of your wave 4 is in. Of course, we can continue the sideways range. That is no problem. But the high of your wave 4 preferably is in. We tested the order block over here. We didn't hit the invalidation for wave 4, the 0.618. We don't want to hit it in this scenario, as we're looking for price to move towards the downside and make a new low, again preferably on lower volume. So far price moving down, increasing volume, right? The vertical lines on the chart are fib times, taken from the low of 1 to the high of 2 to the low of wave 3, comparing wave 2 in time with wave 4 in time. Most commonly, wave 4 is at least the same amount of time as wave 2 or a little bit longer, but what you can see here is that the high has been made pretty much on top of the 1-to-1, which is good to see, but we also still have more than enough room for this wave 4 to continue ranging if it wants to do so. It's just that from a price perspective, preferably the high of wave 4 is already in, because you don't want to hit the 0.618. If we then look at the impulse to the downside, right, if we are looking for a bigger wave C to the downside, where we have a subdegree count of a wave 1, 2, 3, 4, and a wave 5, if we zoom in to this wave 5, then preferably, because wave 3 is extended, this wave 5 is actually a straight line to the downside. But we are currently on the lower time frames starting to range, as you can see. So if we go to the 15-minute, then we had a bit of an impulsive move to the downside, but now we are starting to move sideways and we get a bit of a bounce as well. So we could count an extension in a wave 5 of the impulse, right? So I'm trying to refer to this one as well. So we have our 4, and if this is the beginning of a wave 5, then instead of a straight line, which actually is preferred from a time perspective, and also price, we get a wave 1, 2, eventually a 3, 4, 5 to finish the blue wave 5, right? And therefore finish wave C. In this scenario, we then have a finished one. We're looking for a 2 and then another 3, 4, 5. But that means that this wave 5 in the bigger wave C is going to be quite an extended structure, while wave 3 is already extended as it hit the 2. And as you can read in my box over here, this would lead to an extended wave 5 impulse. Wave 3 is already extended. It is very uncommon to have a double extension in a single impulsive structure. Now, by all means, as price has started to range here, and we could count a 1, 2, 1, 2, 3, 4, 5, and then another 4, 5, where the low is this, or the low is this, doesn't really matter. In both cases, we're looking for price to move to the upside, where the minimum target is the 0.382, which just has been touched over here, right? But the common target for a wave 2 is the 0.5 to the 786, and we do have some resistance towards the upside. Of course, if we take a volume profile, we have the point of control over here around the 0.5 at 64.4K. At the golden pocket, we have the value area high at 64.9K. And then we also have the target box that I have on my chart, the blue box here, 65.7K to 66.3K. But as you know, the 886 is a rare target for a wave 2, and we prefer to not hit that in the bearish scenario. If we do hit the 886, probabilities are much higher to continue to this high here as well. Now on the medium time frame, if we then zoom out to the 4-hour chart, the most bearish scenario is a bigger impulse to the downside, but as just mentioned, the 886 rare target for 2, and this 886 is taken from the high to the low of 1. Also, this 1 is not easy to count as an impulse. The 886 rare for 2, common for a wave B or X. Increasing probabilities, this move down is a wave C or a wave Y, and therefore it increases probabilities to sooner or later move back towards the upside and continue the trend to take the high of 74K. From a CVD perspective, yeah, we have some bullish CVD divergences here if you would zoom in, but what I prefer, especially with this move to the downside, is to wait for some structure locally and see some more local bullish CVD divergences as well, because this low over here already had bullish CVD divergences with this higher low, as well as this higher low, and the more often you have CVD divergences with the same pivot, the lower the probability it actually plays out. So I prefer to observe what happens here and then take it from there. We also have some news today, 2:30 p.m. Central European time, so make sure you trade safe around this hour. If we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities remain higher for the bullish scenario, where we expect a continuation of the trend and price to eventually take the 74K high after this range here is finished. On the 4-hour time frame though, based on what we spoke about mainly locally, probabilities remain a bit higher for a flat scenario where price is going to take this low. We have a bit of an impulsive move to the downside locally, of course. However, the invalidation for a wave of 4 in this impulse to the downside, 1, 2, 3, 4, 5, is very, very clear. At 67.3K, we have that 0.618 invalidation for a wave 4. But in all cases, what we are looking for is either a bounce directly or price to move into the 50s and then find support and bounce to the upside there to continue the trend on the weekly time frame. On the 15-minute time frame, the probabilities here very, very locally are a little bit higher for a move towards the upside. We hit the final support in this range, giving us the opportunity to see a little bit of a bounce, where the 0.382 is a minimum target. That's at least a target that we've hit right now. But the 0.5 to the 0.786 is a more common target for a potential wave 2. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.